Well, g'day there everybody. Thanks a lot for joining me as at this Thursday afternoon market recap. Let me just flick on over to the Dow Jones Industrial Average and we'll go into the recap so far, at least really Tuesday through Thursday. On Monday, it was the last time I brought you a market update. Again, continuing for the majority of this week, the markets themselves, we haven't really seen that of a definitive move one direction or another. On Monday, we floated the possibility of some form of a leaning double top. As it stands, we're still yet to actually break to the downside, and we are nowhere near this green rectangular box if and when we were to actually do that. If we do push on down into this green rectangular box, it is going to be a buy the dip type of opportunity, which will produce that of a whipsaw of the breaking of the neckline. So pay attention to that to see whether or not it does formulate or continue to sort of build moving into Friday's session. If not, we are still looking at these markets taking out the swing highs in September and October of 2018. As you can see, on the exponential moving averages, again, we are continuing to more or less move sideways. What it is telling us is that this trend really off from really December 26th, it is really very much so slowing. You can see the actual angle of the exponential moving averages, especially the 10 and the 20-day exponential moving averages, which were sloping quite nicely, more or less move into a horizontal type of state at the moment. And really what it is doing is if I push the number 6 key on my keyboard and I bring up the Bollinger Band, you can see that we are moving into that of a Bollinger Band squeeze. The good news when it comes to Bollinger Band squeezes is that generally they will break in the direction of the prevailing trend. Now, the prevailing trend, depending on what time frame you are assessing or at least looking through, they are more or less to the upside. The macro trend is still definitively, right, positive. It is very much so bullish. On the intermediate time frame, we are still positive. All right, we're pushing off from the primary bullish trend line over here. So both of these trends are still to the upside. What can become a little bit contentious is whether or not we are in the minor wave, all right, actually breaking to the downside. And the reason I wanted to bring this up to you, or at least point it out, is because these oscillating indicators are still technically suggesting a little bit of weakness. And this is really sort of moving into that sideways correction, whereby I showed you just a couple of slides earlier that we are in the midst of a Bollinger Band squeeze. So really right now we could be in the midst of this minor level correction. The correction itself may and very well just simply be a sideways sort of breather before we see the bid re-enter the market, most likely off from one of these rising exponential moving averages. So at the moment, we're essentially just marking time. The market is really unchanged. If I bring up the weekly chart for you, you can see we are up 201 points. This is on the weekly time frame on the Dow Jones Industrial Average. When I go to the S&P 500, we're up 15 points. Again, rather immaterial movements on the overall indices you can see as well. On the NASDAQ, up 26 points is at the close on Thursday over the past 4 sessions. So technically speaking, the markets themselves relatively unchanged. We're just being consistently patient at the moment and waiting for this market to ultimately provide to us a really nice opportunity to re-enter at lower prices or to again continue on accumulating and adding to positions when and if we break above these swing highs. Ultimately, this move is coming. It just depends which formation, which option, or which route it's going to take prior to pricing in new all-time highs, which is going to be exciting if you are again accumulating longer-term positions on the indices themselves, whether or not it's through the diamonds for the Dow Jones Industrial Average, the SPYs for the S&P 500, or even the Qs for the NASDAQ. This is going to be, again, a very profitable trade. It already is a profitable trade for people in the Qs who jumped in down around 6,696. I understand if you haven't really been pulling the trigger, so to speak, up and around these most recent highs after this very strong rally, all right, this reaction off from the retest of that macro primary bullish trend line. But as it stands, it has been a relatively sort of quiet week. Volatility is somewhat suppressed, and as such, pay attention to these Bollinger Bands. It isn't really all that detailed or showing up all that well on the NASDAQ. However, when I go into the S&P 500, again, you can see that we are holding this 18-day simple moving average. So as it stands at the close on Thursday, although we're not seeing all that much traction or grit, we're still very much so looking for this market to continue its rally over the coming weeks, which is going to be relatively exciting. Now, if I bring up the US dollar, we are seeing again a little bit of a bullish continuation off from the retest of this trend line. So again, we've been speaking about this in that pro analysis class. We've got a series of higher lows, but at the same time, we've got sort of this sort of relevant resistance area. So this is taking the formation of what we call an ascending triangle. And what we're doing right now is we are drawing, if I can just map this using my cursor, right? We're moving closer and closer to ultimately the apex of the break. So the dollar itself, I mean, it can continue to be rather range bound for another month or two. Really, the apex is falling towards the late stages of May. Yes, it does continue into June, but generally speaking, you don't get all the way into the apex of a triangle. You will generally break out of the triangle one direction or another, and given this type of pattern, it does roughly have about a 60% chance of breaking to the upside. And what that means essentially is that as the US dollar continues to appreciate in value, if and when it does take out the resistance areas, there is going to be a natural sort of pressure in the commodities markets. And as you can see today, GLD took a massive tumble. So as the US dollar is strengthening back up into that resistance area, GLD is breaking down. So we were trading up as high as about 125. This was on Monday, so really at the beginning of this week. And here we are now, all the way back down at 122.02. So you can see this big gap, the gap between that of Wednesday and Thursday. We gapped over our actual bearish entry at 122.40. But as it stands, commodities, gold in particular, is exceptionally weak. Now, again, I really wouldn't be going out and jumping into a bunch of GLD puts at the moment. And the reason for that is because we don't have that definitive directional break on the US dollar index. So again, think about that ascending triangle, that consolidation pattern on the US dollar. And really what is going to set, unfortunately, GLD and SLV off to the downside, if it is going to play out that way, is ultimately going to be the US dollar breaking out above its respective resistance area. So it looks as though we're starting to see the first casualty, so to speak, in price direction flowing through to the commodities markets. If this is going to be a true move, this is only going to be the beginning of probably somewhat of a dramatic write-off in the price of GLD and SLV. This is over the next couple of months. I'm not talking about a big macro trend continuation, but this is all going to be on the back of the US dollar continuing to appreciate in value if it chooses to break out above its respective resistance area. The same is true for SLV. Pay attention to the volume. Volume is spiking. We've got a big move today. We're still not below 14.02. But again, the gauge on this trade should be the direction of the US dollar once it breaks out of its ascending triangle. When it comes to individual trade setups, okay, Apple more or less broke out. It has continued to break out. We have seen the pullback, the closing of the gap, and we're still holding up above roughly 188.03. So again, if you go back to 175.99, if you go back to 171.78, if you go back to 178.13, these are all bullish trades. Yes, it has taken a little bit of time for this trade to get going. We really started to get going towards the back end of last week, but essentially right now we're taking the breather, much like the market. Think about those oscillators turning over across the board. And when I was speaking about the correction in the equity markets, it could be a deep correction whereby we move back into that green rectangular box, or it could set up in the way of a sideways consolidation, which is essentially what's happening right now on the equity markets. And as that continues to progress, a lot of these individual stocks, unfortunately, are going to take a breather from what has been that of a rather sort of dramatic rise most recently over the past 2 to 3 weeks. Apple is a good case example of that. If I bring up the weekly chart, we're down $2.45. However, that $2.45 move has been in very much so a controlled manner. So this is essentially looking like a bull flag which will ultimately take off to the upside. And when I bring up the exponential moving averages, surprise, surprise, they are somewhat similar to that of the US indices as well. We are still holding up, technically speaking, above that 10 exponential moving average. We're still a long way above the 20 and also even further away, obviously, from that 50-day exponential moving average. That essentially sums up the equity market right here in one stock, just Apple alone. But if I very quickly flick through a couple of other stocks, again, Amazon went through the Bollinger Band break to the upside, but at the moment it is retesting essentially that pivot, right, at 1,750. So once we move through this correction or that sideways correction, again, it's looking like a little bit of a bull flag. If I bring up the exponential moving averages, you can see once again we're sitting on the rising and also expanding EMA. So this is a very healthy sort of continuation for tech as a whole, for the NASDAQ and for the broader markets also. If I bring up Boeing Airlines as well, all right, obviously it's been under tremendous pressure lately, but at the same time it is holding above 360 at the moment. It's come on back down into this green rectangular box and filled this open window as well. So we're simply sitting here marking time until we break above 382.90. We're still yet to do that, but excited for when that opportunity happens, when that price direction starts to get moving. The same is true for Baidu, yet to enter into this trade at 174.21. Just being patient, waiting for potentially that positive divergence to round out another very slight, very minor higher low, which is going to set off the MACD if I can bring it out on the weekly chart over here, this is something we've been speaking about for a number of weeks now, to really get this sort of party moving to the upside as well, which is going to be helped by the equity markets breaking out. Caterpillar still not down into our green box, but at the same time, it's simply just treading water. We're in a pressure cooker right now with Caterpillar. As long as we remain above these two angled sort of ascending lines on my screen, this is a very bullish sort of continuation to the upside. The same is true for COP. So even though, again, we're largely getting stuck moving sideways, it is a symptom of the broader markets. We're still holding up above these green rectangular boxes, and X marks the spot when it comes to support. We've got a lot of support underpinning COP. And again, once this gets moving, it's going to probably take off in fairly dramatic fashion. If I go into CVX again, this is largely influenced by the oil price. Oil actually looks, it sort of kicks the trend a little bit, but it really looks to be potentially breaking out if you're paying attention to the actual futures. And as a consequence, anyway, CVX seems to be coiling. It seems to be setting up again, surprise, surprise, another bull flag. We haven't seen the breakout, but at the same time, we've got a bidirectional trade set up on this. We're not being too, I guess, aggressive on our entries. We're sitting back, so to speak, watching and waiting for that trade to really get moving one direction or another. Whether or not that resistance holds out or whether we actually break above it, time will tell. I think personally we are going to see CVX breaking out ultimately to the upside along with oil. However, GLD and SLV, right? Breaking to the downside if the US dollar continues to break out of that ascending triangle. Now, again, Disney still yet to enter into this. We have held this green rectangular box. A lot of these trades also, much like the markets, are setting up some pretty flaky inverse head and shoulders patterns. I'm not going to go out on a limb and, again, say that they're textbook. They're not, simply because we haven't entered into a bear market. But, again, this is a very healthy consolidation. As long as you remain above the swing low over here, and above the trend line, more importantly, Disney is going to be ultimately that of a long trade. Google is pulling back. It's coming all the way back down to our pivot down at 1156, which was the original breakout, very similar to the Amazon breakout when they were both going through those Bollinger Band squeezes. Again, if I bring up the exponential moving averages, we have corrected beyond the 20, and it looks as though we're going to come on back down to the original pivot, as I just said, which is in line with the 50 EMA before we take off and essentially break out of what is a longer, sort of deeper bull flag as well. As long as we remain above the 50, everything is a-okay on the Google trade as well. IBM, no major trade in this. We're just simply watching this. I feel as though, or at least it looks as though, it wants to come back down to 134. If it chooses to do so, it may be a very good opportunity to enter into it. But as it stands, it's not really on our immediate radar. And then just to show you Netflix is really toying with this resistance area. Okay, we're still yet to clearly break out above it. But what's really going to help Netflix, along with a bunch of these other individual trades continuing in the bullish direction, is the actual markets themselves actually going through. This is most important right now. If you can take anything away from this class or this sort of recap on Thursday, is to essentially allow these oscillators to come on back down to reset, not necessarily get down into, I guess, the 20 line or the oversold reading, but to just continue its sideways move, allow those Bollinger Bands again to squeeze and constrict price action, and to essentially hold up above that rising 50-day EMA. The longer this occurs, the more explosive the breakout is going to be. And again, I'm just floating the question, are we going to see a false break to the downside prior to breaking out? Or are we simply just going to take off from more or less current levels, or at least from the support area, coming down at roughly 25,388 on my screen? That's what you should be thinking about. But again, what's most important right now is patience. If you remain patient, you are going to be rewarded. And allow other people to make false trades or incorrect trades as we move into the continuation above the all-time highs in September and October. Think about the long game right now, or the longer version of individual trade setups. When you're jumping into option trades, if you choose to do so, or use options as the platform, remember, price those option contracts out into the future, so essentially you can hold them for a longer period of time. Again, we're talking about in the money trades with higher intrinsic value, which isn't going to erode or at least move away or erode away with time decay. And as such, when this trade gets moving, you're really going to get paid off, relatively speaking, quite well in percentage terms based on those contracts, right? Depending on which strike you're entering into and what time frame. All right, so on that note, everybody, I'm going to say farewell to you as at this Thursday afternoon market recap. If you have any questions at all, please email me, success@pivotpoint-trading.com. Otherwise, I'll see you on Saturday in that pro analysis class. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.